leading up to the Future Blockchain Summit, we also have the joy of executing a hackathon with 5 different tracks: CeFi, DeFi, NFT, social networks, and 3 other tracks. I urge you to go to TDeFi/BizThon to look at this. The idea is to bring your idea from idea to fully fledged company. The prize for the winner is up to $1 million. So sign up and go to our website. We will post it in the chat. Or if you don't have the idea but know people that do, refer the winner. If you refer the winner to our tournament, you will have the chance to win a Lamborghini Huracan. No, we are not airdropping a Huracan. We are giving it to the winner who refers the best team or the winning team and the winning idea. And with that, I have the joy of bringing in today Ambre Subirian. She is here to talk to us about market data and market infrastructure in blockchain. Ambre, why don't you tell us a little bit about yourself, and we'll take it from there. We'll
Hello, thanks.
Questions.
Yes, thanks for having me. Delighted to be here. My name is Ambre Subirian. I'm the CEO of Kaiko, and we're a market data provider in the crypto asset space. So I'm here to talk about what we do at Kaiko, and more generally to introduce market infrastructure, and especially data market infrastructure, and then how does that apply to crypto and blockchain, and why is that so important? So I have a few slides that I'm going to present, and happy to make some time at the end for questions.
Great, thank you.
Shall I share my screen?
Yep.
All right. So, sorry.
Great.
Can you see my
screen?
Yes.
There we go.
All right. Perfect. So one thing first in general that is just a general statement on crypto and data and infrastructure is that the availability of reliable and actionable financial data is key for any kind of individual enterprises and institutions. And as we're here talking about the blockchain context, and especially everything that happens on DeFi is mostly built on Ethereum, how does that play a role in building financial applications on Ethereum? So here we'll talk about the importance of the interoperability between centralized finance and decentralized finance from an infrastructure standpoint, and how we at Kaiko are approaching it through the lens of data. So first, a few things about the space in which we're working here. Blockchain technology offers a platform for rethinking finance and digitizing finance through the creation of programmable money and financial instruments. What all of us here call DeFi is, for me, an incredible sandbox that proves that blockchain is a technology and as an underlying architecture works in order to implement all kinds of financial applications. And that could actually serve as a backbone for financial markets and the general wider capital markets industry at large. So today, when we think about, from a data perspective, our addressable markets, we're looking today mostly at crypto assets, right? So crypto assets actually is about $2 trillion industry today. And this is a non-negligible industry that is now considered by most institutions as a new addressable, investable asset class. I'm a strong believer in the fact that blockchain will serve as a platform for creating securities. This is the whole security token angle, and that we're going to start onboarding on blockchains, traditional asset classes, equities, debt securities, all of the kind of more traditional asset management, audit, and insurance securities. This brings us to a world where we have a new digital finance where securities are being issued on blockchains, and when there is an entire secondary life cycle of those securities with financial contracts in place and the need for a reliable infrastructure. So what is market infrastructure? Market infrastructure means a lot of things. There are data providers, there are ETP issuers, there's market makers, people that are providing liquidity on markets, there's calculation agents that are calculating reference price and benchmarks and indices, there are brokerages, order executions, exchanges where actual trading activity takes place, clearing and settlement, and custodian. This is traditional market infrastructure providers. If we look at market infrastructure in the context of blockchain, we are seeing a record number of VC deals and acquisitions of those infrastructure providers in the context of crypto. They're the brokerage platform Togomi, who got acquired by Coinbase recently, one of the largest makers out there, B2C2, got acquired by a Japanese group, Fireblocks, the custodian. There's a lot of investor money that is getting into that industry. And traditional actors as well, traditional capital markets actors are also investing increasingly in crypto infrastructure. Fidelity Digital Assets has been involved in this space for a long time. We're seeing large banks and large institutions moving towards digital assets. So that's just to give you an idea of the different market providers, market infrastructure providers that are focused on building that within the crypto space. So in the context of market data, why is market data important? Who uses market data and what do they do with it? We at Kaiko address all of these actors in the blue bubbles, which is using our data for different stages of their investment lifecycle or for different use cases. So the regulatory researchers, academia is going to look at historical data in order to run backtesting and research and just look at how all of those crypto assets have behaved in the past. Then we look at institutional investors, funds, asset managers, brokerages, custodians. These guys actually need to have access to live data. The data question is huge. When you think about trading Bitcoin dollar, for example, there are hundreds of crypto exchanges today globally where you can actually do that. And all of these individual exchanges will have their own order book, which is the combination of the buy orders and sell orders that are being placed on the markets. It will have its own price discovery where orders, buy and sell orders are matched and convert into executed transactions. So the ability to monitor markets in real time and to be able to compare the price of any given pair across multiple trading venues is important. Finally, there's everything that comes around post-trade valuation. So data is also important when you look at the regulatory-driven valuation use cases. When you're an audit company and you need to get your accounts audited at the end of the year, if you hold crypto assets, the actual counter value in the price for crypto is going to be highly important as well. So for all of these reasons, having a reliable market data infrastructure is key and actually powers financial market. As soon as you have a financial contract that refers to a security, the question of the price is incredibly important. However, in the existing DeFi industry, we're seeing a lot of pain points. One of them is that it's a very fragmented exchange landscape. And I'm not just talking about all the hundreds of centralized exchanges that are out there, but now we're also seeing the emergence of a number of decentralized exchanges and protocols. And all of these different trading venues require different integration in order to interact with the markets. There is no standardized taxonomies, meaning that today, if you want to implement a on-chain kind of financial contract where you say you're going to settle on the price of Bitcoin dollar, you actually need to specify where do you take your Bitcoin dollar price from? Do you take it as the price on Coinbase? Do you take it as the price on Uniswap? Do you take it on the price on Kraken? Or do you actually just take a global average price over a given time span? So their actually way of referring to those instruments are not standardized currently in the industry. It is time consuming, it is expensive, data collection, data storage requires infrastructure investment, just basic things as CPU and AWS or whatever cloud technology you use in order to process all of that data and store this data. There's no historical data available for centralized exchanges. The data is made public in real time. However, it disappears from the exchange API after a short period of time. And finally, all of these first pain points are basically making all of that data consideration quite hard to solve. And so the lack of standards makes data ingestion difficult to do at scale. The reliability of the access to data is key today for institutions to build on crypto. So I come from the traditional capital markets industry. My background is equity derivatives structuring. I was here in London for about 10 years before moving full-time to crypto. And I think I've seen the best and worst of both worlds. And I strongly believe that crypto market infrastructure has to be interoperable with traditional market infrastructure. So I'm a huge proponent of the bridge of those two technologies, leveraging the best of traditional finance and the decentralized, censorship-resistant, auditable aspects of blockchains. So how do you actually learn and collaborate with the existing financial industry, what we call CeFi in that context? A lot of the different bricks of the financial infrastructure has already been built. Crypto enables a rethinking of the way the underlying IT is thought through. So when we think about digital scarcity, when we think about how do we represent ownership in a given security, this can be reinvented through the use of blockchain. But we also have to learn from existing traditional financial models. And I'm a huge believer that collaboration here between CeFi and DeFi is highly important. So what do we do at Kaiko? In practice, we are connected to all of the different trading venues out there. So the usual suspects, Kraken, Gemini, Coinbase, Binance, all of these traditional centralized exchanges, but we're also running our own Ethereum nodes in order to extract decentralized exchange data. So we're connected to Uniswap, SushiSwap, Aave, Curve, and all those DeFi protocols. We gather a lot of information, which we collect from either centralized exchange APIs or directly into the blockchain. We standardize this data, we store it, we create analytics, and then we expose that data to the industry through various different data delivery systems. So we have a flat file delivery called the data feed. We have a market API, which is a traditional REST API where people can query our database. We have a live stream where we provide real-time data, and we also work with oracles. So we work with the likes of Chainlinks in order to bring any kind of financial data directly written onto the blockchain so that it can be used directly by on-chain applications. Currently, we're integrated with over 100 different cryptocurrency exchanges, and we cover over 100,000 different crypto instruments. We have a reference data API, which is public, and it's called instruments.kaiko.com. You can see there all of the instruments globally that are traded across all of the exchanges. We cover spot, but also options, futures, swaps, perpetuals, any kind of crypto instrument that has a market somewhere we'll cover from a data perspective. And we have been working with Bloomberg recently on the issuance of unique identifiers in order to keep track of the different instruments listed across the board and make sure that they have their own unique way to be identified. So we look at DeFi market data as well. Currently, we're integrated already with all the main kind of L1 dexes, Uniswap, V2, V3, SushiSwap, Curve, Balancer, 1inch. We're looking at onboarding new kinds of data, and we're looking at lending and borrowing protocols and modeling new types of data into financial data metrics. We're going to also release soon our supply endpoints for Ethereum, Bitcoin, and all ERC20 tokens. And we are seeing this as an increasing part of the demand as DEXs are just covering an increasing market share of crypto trades. So in short, why do we do that? When you think about the investment lifecycle, be it a DeFi trade or a traditional investment in Bitcoin, data is needed for every stage of the investment lifecycle. That goes back to what I was saying earlier around who do we address and why. There's all the pre-trade requirements, which is research. And for that, we have the Kaiko data feed, which is high quantities of very precise tick-by-tick trade data and historical data. We have the trading use cases, which is real-time data through our Kaiko WebSocket API. And then we have all the post-trade use cases where we make the valuation data available. Valuation data could be something such as a client wanting to get a reference price for Bitcoin dollar at 4 p.m. every day so he can mark his books. So these are the kind of use cases where the source and the reliability of information is key. This is an example of something we're doing in the context of bringing more standardization and identifiers in the space. We have been working with Bloomberg the past years in order to expand an existing data standard to cater for crypto assets. So FIGI is an acronym that stands for Financial Instruments Global Identifier, and it basically attributes a unique number of characters to every single financial instrument out there. Why do we do that? Why is that important? We need to have a way from a data management standpoint to identify Bitcoin, but not just Bitcoin. It's important to identify a pair composite, such as when you're looking at crypto in the context of a financial application, you're going to talk about Bitcoin in dollars or in euros or in Japanese yen or whatever currency. So you need to have that pair composite level data. So here we are creating identifier for Bitcoin dollar, Bitcoin euro, Bitcoin Japanese yen, but then we're taking that one step further, which is also drilling down to the exchange level. So if you're talking about the price of Bitcoin dollar, it actually doesn't mean much unless you specify the trading venue where the price discovery happens. So here we are creating identifiers at the exchange level, such as Bitcoin dollar on Coinbase, Bitcoin dollar on Kraken, Bitcoin dollar on Itbit, etc. So this is very important because identifiers in the context of data and here in the context of crypto are used in order to manage the transition of the way any kind of financial instrument is moving through the functional aspects of the investment lifecycle. You could define a strategy on Bitcoin and then backtest it on Bitcoin dollar, taking the price from many different trading venue level. So that was hoping, maybe I tried to go fast so we have time for questions, but I really wanted to introduce the notions of what is market infrastructure and what does it mean in the context of data and why is it so important. This is merging both people that are looking, institutions that are looking at crypto from the angle of trading cryptocurrencies, but this is also highly important in the context of how we think about building out DeFi. So I'll stop talking and I'm very keen to get questions if there's any.
Thank you, Ambre. So we have a couple of questions here for you. I think you covered some of it already, but maybe you can reiterate if it's almost the same. So what is the strategy to manage and analyze the Magnaminous flow of on-chain data?
I beg your pardon, can you repeat the question?
What is the strategy to manage and analyze the Magnaminous flow of on-chain data? You covered that a little bit in the beginning, but.
I think it's a very good question. The way we're approaching this is to segment it per trading venue. So, you know, if you just think about blockchain data as a whole, it's this giant sack of knot and you don't really know where to start. So we are a financial data provider at core. Before doing on-chain stuff, we're looking at trading data on centralized exchanges. So we're taking that approach and looking at crypto, at on-chain data from that angle, which is, for example, we started with Uniswap and we started with Uniswap trades. So I'll give you any kind of example, whatever Ethereum trading against any ERC20 token on a liquidity pool on Uniswap. We would look at that and we would take those executed trades because they are very similar to the kind of financial data you find in traditional world. We're talking about price data. So for now, we're taking protocols per protocol and we're looking at financial data exclusively. Will we look at more types of data in the future? It's very likely, but that's how we're kind of breaking down the space.
Cool. Do data-driven decisions hold value in the crypto world, especially considering NFT as an asset class?
So our segments, so NFT for now, and I know there are some exceptions, but most of the NFTs are still targeting a very retail audience.
Right.
Whereas Kaiko addresses a more institutional kind of banks, asset managers, traders, exchanges, custodians. That part of the industry for now is less demanding of NFT data and NFT kind of whatever it is, trading capabilities, and all the market infrastructure services I presented is less of a priority in the world of NFTs right now. However, NFTs doesn't have to be space apes, right? NFTs can be a tokenized security. Literally what an NFT means is that it's a non-fungible token, as in it represents ownership in something that is unique it could be something that is unique in the real world. So it could be a specific share class of a company that has preferential rights or something. And obviously this brings us to the world of tokenized securities, which is something I believe is going to be huge in the future in terms of blockchainizing traditional finance. So long answer to a short question, we're not doing NFT data right now, but I believe that it's going to be big in the future, less for art, but more for securities.
Correct. We see that as well. Due to the ecosystem being in its nascent stage, OI tends to change dramatically over a short period of time. How can data help to be in pace and modify our trades accordingly?
I'm not sure I fully understand the sense of the question.
How can data help to be in the pace and be up to date and modify, and how can it help modify our trades accordingly?
So are we talking about the speed at which people can execute based on information that they have?
No, I think it's a matter of how can we make sure the data is up to date when we are executing on trades.
Yeah. So there's a big question around latency when you think about on-chain data, right? Because on-chain data can only be provided at the speed at which blocks are created.
Yep.
So in the traditional data world, we can put in place low latency pipeline data delivery, enabling people to get access to information as quickly as possible and thereby make very informed decision at a kind of timely fashion. When we think about on-chain, it's going to be more for use cases where latency is less sensitive. Just because if you're right on, depending on which blockchain you're working with, you're just going to be dependent on the block production speed.
Right. And and as the blockchains get better and better, that will also help with the latency. As per the common saying, the crypto ecosystem is driven by narratives and tweets rather than the fundamental drivers. What is your thought on this?
I think this will mature and that data will become increasingly important, but it is, when we are day in, day out into crypto, we feel that that's the only thing the world talks about. My Twitter feed is like a horrible mess of crypto Twitter, and I feel that literally this is the only thing important in the world. Truth is, we're still in a very niche market, in a very niche industry that is still very emotional. Just the fact that a tweet from Elon Musk can shoot the price up or down 30% is clearly an indicator that we are still in a relatively immature industry. So I think that will be solved in the future by market consolidation, more kind of diversity also in the investor base and who are participating in the markets.
Right. And on an exchange level, what changes do you see coming? I find with tens of thousands of exchanges all over, you guys cover maybe 10, there's probably 25,000 different exchanges. How is that are we gonna see a market consolidation like that too?
So yes and no. I to your point, yes, there are thousands of exchanges, but honestly, I think 98% of the volume is concentrated on the top 40, probably. So not all exchanges matter from a volume perspective. Obviously, you'll have small exchanges that are kind of tied to a specific country with a specific jurisdiction, etc. So I'm not saying they're irrelevant. I'm just saying in the big picture, in the picture of data, we're very much looking at the exchanges that trade the most volume. And if you look at prices, they're very, very correlated, and the largest volume exchange generally drives prices. And you can see all the other correct after them relatively fast, actually. It's getting relatively efficient. And that's also thanks to the availability of data. So there are a lot of exchanges, but there are only so many that really matter from a volume standpoint today.
And have you seen the difference in price from these different exchanges? So you're saying that the price update between these exchanges is going pretty fast now compared to what it was 3-4 years ago when I started this, because it was a nightmare back then. You could basically run the market if you had the data from one exchange before the other.
Yeah, absolutely. I mean, before you even had like arbitrage funds, right? That they're just taking exactly. Now it's less easy to do that. Also, just because the latency at which you get out and get in and actually execute trades is not as fast, and because the spread between the prices across markets is much more narrow than it used to be, and that's also due to markets being more efficient today, right?
Right. Cool. That does it for our questions. I don't know if there's any in chat. Let me just check here. I don't think so. Nope, no open questions. So we're good. Thank you so much, Amber.
Oh, you're welcome. And I'm happy to, if anybody wants to reach out, you can contact us on hello@kaiko.com, and feel free to ask if you need data, even if you're a student and you need to use data in the context of any hackathon or any project or any research, feel free to reach out. We'd love to help.
Okay, very cool. Thank you so much.